Hello traders, Gary Wagner here. It's approximately 10 a.m. Thursday in Honolulu, Hawaii. That means we're looking at 4 o'clock in New York City, the 12th day of January 2012. And this is the daily report for gold and silver. We have both gold and silver both well off of the highs of the day. We'll talk about that in a bit, but they are trading nominally higher, up about $5, $4.70. As you can see, current print, 1647.55. That would be a bid. The ask is $1 higher on that. You have silver up about 12 cents. That's almost a 0.5% higher, 0.40. And that's trading, as you can see, above $30 per ounce. It's a good signal. Now, for my subscribers that follow me on a daily basis, watch the daily videos, you know that I've been looking at two really critical target areas that I believe gold needs to break through to show me that we are going to be continuing this rally, and more importantly, to give us some real concrete technical proof that the correction, this ABC correction right in here, A, B, to see that had concluded when we hit these lows. Call them 1525, right in that area. The first area that I really wanted to see and really would give me confirmation was an area right around 1625. It put us right somewhere in this area, and you can see that it really would have matched up with some of the bottoms that we got right in this one corrective period here. We succeeded in taking that out. And traders, today, we have succeeded in trading above 1645. As I said, current 1647. We'll want to see where it closes. But as you can see, it's trading well off of its highs. When we consider the fact that this market traded really substantially higher, and let me go ahead and pull up our crosshair so we can get the exact fix on that price, but it hit a high of about 1661, 1662, right in that area, as you can see, and then it pulled back really hard on a very quick round of profit taking. Now, when we take a look at this market, this is, of course, our daily candlesticks, but when we go to our Heikin Ashi, realize this, of course, is always going to be a lagging indicator, but it gives us a real strong sense or definition of trend. What are we seeing here? Well, the first thing that we see is that there can be no doubt the market is trading above that 1645. Will it close above that? We'll have to see, because it's rather close. But that, to me, is a very critical number. The second thing, when we look at the Heikin candles, is that we're still clearly in an uptrend. The point in which I looked at, I believe last week, where I had some concern, you can see this breathing area. It still ended up being a green candle, but it developed a tail, and it was following that smaller doji, which can be indicative, when you see these smaller dojis, of turning points found within a market. At the same time, when you have these extended rallies, you also get these dojis appearing. And a doji, once again, is simply a day in which, on a daily chart, the open and close are very close or exact or the same. Traders, we have had a very nice showing in silver, trading above $30. In fact, the ask bid spread, you're at 30.20, right around there. And my sentiment is we really don't have any real strong, what I'll call hard resistance, until we hit about 30, just below $31. Now, I do find it interesting that both of these markets, both gold and silver, had these tremendous rallies, but in a very, very quick round of profit taking, really came well off of their highs, as you can see here. You know, we had this doji again. It appears as though it was a resting area. But again, we've got this small-bodied candle. It's really showing us a consolidation in the market. Now, today's activity was quite interesting. We did have a weaker U.S. dollar. We have also seen a marketplace right now that has higher crude oil prices. But interestingly enough, there are some fresh developments that are occurring right now in Europe regarding the sovereign debt crisis. Thursday included, and this is according to Kitco, successful auctions of Italian and Spanish debt, European Central Bank meeting, however, saw no interest rate reduction. That was bullish for the euro currency. You know, if we look at the marketplace itself, and I want to leave us with a weekly chart, and this is giving us really the big picture. Let me go ahead and widen that up for us. And what I've done is I have put a retracement, and that's from this area right before the market broke, and this is the $1,000 mark. It comes back down and retraces, which is why I'm putting it on this dip. What I found interesting is when we line that up there, you can really see this is a 38% retracement of that move, and that puts you at about, call it 1533, low being 1534 here. Lines right up, and of course dips a little bit below here, 1525 being the low. Trading currently at 1649. Market is moving up. My next real point of resistance that I see then is going to be based upon this retracement number, and that retracement number is going to be about 1681. So if we get a nice firming in the market, I think that this trade that we put on at about 1580 will give us about possibly as much as $100 to the upside before it moves down. So we could see something like this, our correction, and then our next spike up, meaning wave 3. As I said, I do believe that this market inevitably should take us to new record highs. When will that be? I was looking forward towards the end of the year. That could happen sooner, but I do believe that this rally, meaning this major fifth wave, will propel the market to new highs. Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.